Good to have you. I love when these earnings start coming down, especially the marquee names. What do you look for here?
I mean, the good news is that Netflix is going to have subscriber growth. Well, whether that's a few decimal points one way or the other, it's a completely different sea change, really, from what happened last year when it was contracting those subscribers. So I think the story for Netflix, whether it comes in a little bit above or a little bit below, is it's making the right moves as a business to exist and thrive in this economy.
Lost 1 million subs in the year-ago quarter, right? You had 2 straight quarters of sub losses. Why have they been able to reverse that?
Well, password sharing, the crackdown on password sharing has been crucial for them. They had 4 of their highest single-day sign-up, according to some third-party data, right after this happened. When you do that, it just shows that your product is working. People want Netflix. They got used to it over the years, and they always had this lever. They always had this ability to say, all right, enough with the free ride. They said it. They're growing again. That's been huge for them.
Speaking of free rides, the ad tier, right? They just say they scrapped their cheapest one. It's $10 a month. How is this contributing, do you think?
Yeah, right now it's doing okay. 20% of new signups are coming in via the ad tier, right? So that means they are getting some growth from it. We're going to start to see them monetize that tier, by the way. I have hearing Madison Avenue talking again about growing advertising dollars. And there was a long time where the economy was uncertain. They weren't spending. Now they're starting to spend again. That's another incremental revenue source for Netflix.
I'm sure you're thinking about the strikes that are ongoing out in Hollywood. This company has had to think about it less than others in the media space. It just hasn't been as impacted. Now, who knows what happens if it really drags on for many, many, many months. But nonetheless, they've been able to avoid the biggest impact that others have felt.
Oh, yeah. They're in much better position than their competitors. And that's for 2 reasons. One, they have a nice stock of foreign shows and movies. Korean dramas on Netflix are really hitting. I'm in the middle of one right now. Crash Landing Into You, super fun. And then there's a lot of reality television that they use. Now, people have been slagging Netflix, saying, oh, it's junk, it's filled with crap. Actually, Americans and people worldwide love watching these shows. Lots of great dating shows on Netflix. They can thrive on those while the rest of their competitors try to figure out what to put in their sites and on TV.
So we're looking at media stocks right there on the right-hand side of our screen, right? And you see the one at the top is Netflix, and it's up 62% year to date. It's outpaced everything, and it's done incredibly well relative to some of its big tech brethren as well. Maybe that's one of the biggest obstacles going into the print. The stock's already up a lot. How do you think about that?
Yeah, it's definitely up a lot, but it's still down from the highs, where it was around $700. So when Netflix had its big drop, this was really a question of, like, can it settle into the right valuation? Can it settle into the right place for a company like it is, which is not, it's really not a technology company. It's more of a media company, and it's been valued, and it still really is being valued as a tech company, but just it can't really live to sustain those highs. It's in a much better spot right now. And, it's down from the all-time highs. It's grown this year. Maybe that's the right place for it.
We've been talking about these mega cap stocks, and this isn't necessarily a mega cap. But when we talk about those, we always cite the execution of the Tim Cooks and the other CEOs who are front and center. Do we talk about the execution of the Netflix management team enough and what they've been able to do, making the transition the way they have?
I think that we do talk about it enough. Now, we don't talk about it too much because the reason why we're not spending as much time on it is it's just a different business. It's a completely different world to build an Apple than it is to build a Netflix. Apple has a mini Netflix inside Apple. It's still building the iPhone. So I give Netflix management a lot of credit. They've come out of a really tough time. They're growing subscribers. They've built this ad product. They're doing everything they need to do. They're insulated in some ways against the strike. But they're just not on the same plane as some of the great tech leaders that we have today.
No, but they've had to figure out some complicated issues. When you're losing subs, like we said, when you're losing 1 million subs a year ago and you have 2 consecutive quarters of declining subs, you've got to deal with the password issue, which they were pretty forceful in. They're like, we're doing it, like it or not. It's worked. The ad tier, which they initially shunned, they decided to do. Don't they deserve any credit for that?
Oh, definitely. I'm not taking away from them as a business. They've executed the playbook perfectly in terms of what they needed to do, where they were, where they needed to get to. I just think that this is kind of it for Netflix. It's a great company. It shows great, it's great shows and movies. People love it, but it has a ceiling.